Hello, today is the 5th of April 2012, and it is a Thursday. This is the chart of both Apple and silver going back to the bottom of 2008, 2009. The silver bottom occurred in October of '08, so it's an orange. And the Apple bottom occurred in January of 2009. So for a while they were pretty much going at it neck and neck, and well, obviously since this point in here, Apple is now up about 8 times since the '09 bottom, where silver up about 3.5 from the 2008 bottom. We'll take a little bit more, a different look, or a more longer term look of Apple and silver at the end of this video. But now let's get started within the technical analysis on the daily chart for silver. If we're going to have this run to 30, then it's sure as heck going to take its sweet little time, which is, I'm not going to say uncommon or common, but it's definitely not a surprise. The inverted head and shoulders pattern, of course, broke down towards the bottom part of the previous low, and is again starting to rally just a little bit today, as it's up 36 cents or about 1.1% as I'm stating this. If you're looking for Fibonacci retracement, once it retraces 61.8% from this high to this low, I'd be a little cautious. Pretty much into this little band area. The 18 front-weighted 18 period average of closes is now at 32.24, and if it finds resistance there, just maybe that's where it's then going to come down to the 30. But as it's taken sweet little time to go down to 30, it could also be taking its sweet little time in developing this failed breakdown, because it's been, I'm just counting this right now, like 3.5, close to 4 weeks now, since it's broken down below this level in here. Okay, let's now take a look at Apple again with silver, but this time let's go back to 1984. And this is the actual price, not the how much times it has gone up. So there was a day and age back in the mid-1980s where silver was higher than the price of Apple. You can also see, just by looking at this chart on the up and down movements, that Apple is a more volatile moving index than silver. And a lot of times it's unfair to compare a stock with a intermediate commodity. I'd like to say major, but I'd have to say no. When you compare gold and oil to silver, gold and oil would be major, silver would be intermediate, at least as of now. So the movements are a lot more major in Apple. But what's interesting is people were saying back in here that, you know what, man, it's gone up too much, too fast, silver has. So that's why it had to top in here. Yet, I guess if we compare it to, well, back in here, well, geez, oh, wow. Okay, well, what I've seen is Apple had a higher rate of ascent in here than silver did back in here, and Apple just had a small consolidation and kept going. The whole point of me saying this is to state, just because a chart looks like it is up too much doesn't mean that it is going to stop going higher. And this is more for future situations when this thing regains. And when you look back at Apple even here, do you think people were panicking? Oh man, it's just going to go lower, it's just going to go lower. Or even, maybe we're going to come back and test this previous resistance area roughly between 35 and 40. That might be what it's planning on doing, or it might be what it's not planning on doing, which it obviously did not do such an occurrence. Now, overall, I really don't think it's Apple that's really volatile, or the price of silver that is volatile. It is what it is priced in, the fiat currency, that makes it really volatile. For silver, the actual tangible physical metal is the opposite of unstable. It's stable. because it does not contain a half-life, therefore it does not decay. Thank you for tuning in and have yourself a great day. Bye-bye.